Good morning, my name is Richard Perry and this is the ETX Capital Morning Market Bite. Most Asian equities dropped overnight as Chinese equity markets went into a fresh tailspin as investors' nerves already anxious by the uncertainty hanging over the future of Greece and the European Currency Union. Chinese stocks fell more than 5% at one point despite unprecedented steps last weekend to help stabilise the tumbling market, with the CSI 300 index falling to near 4 months lows. The MSCI's broadest index of Asia-Pacific shares outside of Japan fell 0.6%, led by Hong Kong, South Korea, though markets in developed countries fared better. Asian assets were also increasingly burdened by rising concerns over massive losses in Chinese stock markets over the last few weeks, which are raising fears of damage to the already slowing economy and questions over the government's policy decisions. Trading remained highly volatile even after emergency measures from Beijing to help stall the decline in equities, under which brokerages and fund managers vowed to buy massive amounts of stocks, helped by the Chinese-backed margin finance company, which in turn would be aided by a direct line of liquidity from the central bank. European and US stocks fell on Monday after the Greeks voted overwhelmingly to reject more austerity. In addition, the European Central Bank made it harder for Greek banks to access emergency loans, adding pressure on a country whose financial systems remain shuttered as it awaits political talks in Brussels. While the ECB Governing Council agreed in a conference call to leave the cap on the ELA, which is the Emergency Liquidity Assistance Programme, unchanged at €88.6 billion, the change in collateral term represents a stricter policy overall. That signals officials' views that the country's lenders are at greater risk of default since voters in Greece's referendum on Sunday delivered a decisive no to creditors' bailout terms. For now, investors are holding out, hoping that Greece will manage to strike a deal with its creditors and prevent an exit from the Eurozone. In the currency markets, the euro rebounded from Monday's one-week low to fetch 1.1044 against the US counterpart, while the yen, initially bought as safe haven play, pulled back to 122.71 on the dollar from Monday's high of 121.70. The Australian dollar fell to a 6-year low of 0.7452 on Monday, last stood at 0.7480. Over in the commodities markets, London copper fell to a fresh 5-month low of $5,512 a tonne, falling as much as 1.4% on fears of an ever-slowing Chinese economy. Oil prices also steadied, having suffered bigger sell-off in 5 months on Monday as crude fell 7.7%, hitting a 3-month low of 52.41 a barrel and stood at 53.03, up 1% from late US levels. Brent also shed 6.3% to 56.40. Over in the UK equity markets, Marks & Spencer, the British retailer, said underlying sales in its non-food business slipped in its first quarter, a setback for the group after a return to growth in the previous 3 months. Shares are trading at 552.54 pence, up 0.87 on the day. ASOS, the British online fashion retailer, said 4-year sales growth would be at the top of guidance. Its strategy of cutting prices internationally continued to boost trade. Shares exchanging hands at £39.05, up 1.28% on the day. For today's data points in the UK, industrial manufacturing data to be released at 9:30, and at 1:30 we have US trade balance. Currently the FTSE is trading at 65.33, down 8 points, and the DAX at 10.932, up 36 points. Thanks.